From June 23rd to July 14th, the Dow Jones is going to move higher. And this isn't a forecast, it's a mathematical trap that triggered in 2007, 2011, 2018 and 2022. Every single time Wall Street points the charts green, retail investors pile into the market believing the worst is over, and then the floor drops out. I call this period the green illusion window. Today I'm going to show you why this rally isn't a gift but a bait. And if you don't know how to play it, you are someone else's exit liquidity. Here's the thing. The rally driven by this cycle ends the same way every time. The market reverses immediately or a little later when this short window closes. In 2026, that window runs from June 23rd to July 14th. That's the green illusion window, because the rally is real, but what follows it is also real. During those 21 days, smart money isn't buying, they are looking for someone to sell to at the best possible price. Let's look at the historical record. From June 23rd to July 19th, 2007, the Dow Jones didn't just rally, it closed above 14,000 points for the first time in history. It was a historic moment. People were euphoric, the economy felt like it was on a tear. And then, a few weeks later, the subprime crisis began to unravel. In August, the market sold off hard. Anyone who bought at the July 2007 peak got one of the most painful lessons in the history of American markets. Now 2011, from June 24th to July 15th, the Dow moved noticeably higher. The economy looked solid, and then the Congress ignited a debt ceiling crisis. Standard & Poor's downgraded the US credit rating from AAA for the first time in history, and in August the market dropped double digits in a matter of days. Nobody was really worrying that it would happen that fast. 2018 was a slightly different story. From June 21st to July 12th, the Dow was recovering. The Fed was reporting a strong labor market, and Trump was saying trade negotiations were going fine. The market held on through August and September, but in Q4 came a brutal collapse. December 2018 was one of the worst Decembers for the market since 1931. People who relaxed after the summer rally lost everything they had made all year. And finally, 2022. From June 21st to July 26th, the Dow bounced back after a brutal first half of the year. Investors started to believe the Fed would slow its rate hikes. The market climbed in July. Then in September and October it fell again hard, because inflation hadn't gone anywhere and the Fed kept tightened. Now let's look at 2026. A trade war is underway that is only beginning to hit supply chains. Corporate earnings are starting to crack, and the average American family is maxed out on debt. When the green illusion window opens on June 23rd, and it will open, the market is going to look very convincing. Your portfolio will look better than it has in months. This is a real rally. I'm not saying it isn't, I'm saying it's temporary. And after it comes a serious decline, just as we outlined in the historical examples. The green illusion window is not a reason to panic, but it's a reason to stay cold-blooded. This is your chance to lock in profits on those risky positions that have been keeping you up at night. This is a time for rebalancing, not for adding more leverage. History doesn't repeat itself, but it rhymes. And right now it's rhyming with some of the biggest crashes of the last 20 years. The specific dates when this pressure will peak, I broke those down in a separate video, link in the description. Don't be the one buying at the top. Keep your head clear.